What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Today, I'm going to go over my free weekly newsletter that I send out every Monday. Just sent that out. So if you are a subscriber, check your inboxes. Uh, Make sure you guys, if you're checking, you don't get these every Monday because I've sent them out like clockwork every Monday. If you're not receiving them, check your spam because sometimes it goes into there. But anyways, that's what we're going to be doing today. Let me bring up the screen. So here is the website, bitcoinandmarkets.com. You can go there, sign up for the free tier that includes these free weekly newsletters that summarize everything in Bitcoin, from price to news headlines to mining industry, lightning industry. Everything is in here. I think it's the best overall snapshot of the Bitcoin industry in one newsletter. So if you're not subscribed, get over to bitcoinmarkets.com, sign up for the free tier. You can also support my work there and even sign up for the premium tier. There's my Market Pro, Premium Market Pro goes out at least once a week, and that is my in-depth price analysis. I also do other sort of research I put out one a couple weeks ago on the oil industry. And if you sign up, you can get all the back issues of all that kind of stuff. Another thing that came up this morning was people have been using my chart from, let's see if I can find this real quick. I wasn't planning on talking about this, but yeah, right here, share this tab. So this is an old tweet back from 2020, but this James Eagle 17, he stole my chart here. He did update it a little bit. He didn't do it exactly like I did, but he took my idea of going from 1250 on global reserve currencies and plotting them like this using the florin and the ducat. Those were the main ones starting. Those were the gold standard going into silver standard, back to a gold standard, and then to the credit-based US dollar. I don't know how I got onto that, but because I'm thinking about taking all my content from the other website, btcm.co, and putting it all onto Bitcoin and Markets and making that the main home base for all of my content. And that kind of those research pieces will probably go out first to the Market Pro subscribers and then later on be released publicly. But check it out. There's a few perks there with bitcoinandmarkets.com, and you can support my content. Okay, let's go through this week's newsletter, Bitcoin Fundamentals Report. Nice meme up front. Beautiful. Bitcoin is the home of green shoots, like I have been saying for a long time. In a deflationary argument, with a deflationary argument, Bitcoin is the one where is the place where all of the green shoots happen, where all the proper price mechanics are happening, and not in the old decrepit credit-based system that is caught in a deflationary fatal grind. So yeah, I thought this was appropriate. Bitcoin with the green shoots, green nature, it is the future. Okay. So snapshot of Bitcoin, weekly trend, it's holding support. We'll go over the price charts here in just a second. Media sentiment is still negative. It hasn't been quite as negative over the last I would say the last 2 weeks, it hasn't been quite as negative, but it's almost like an absence of horrible hit pieces means that it's not negative. It means that it's positive. No, Bitcoin is still negatively perceived by the mainstream financial press for the most part. Okay, network traffic is very high, actually. If you look down a little bit lower here on the mining sector, we have very high fees. Mempool shot back up to 89, 90 megabytes. Fees are over $1, which is the first time in quite a long time that I can remember fees being over $1. So there is quite a bit of traffic on the network. And I have a theory why that is, and we'll see that down below in the mining section. Okay, price. So up about $1,000 since last Monday's issue. And Lightning Network, the capacity went up a little bit, less than 1%. over the last week, but channels fell a corresponding amount. So fell by almost 1%, which is very interesting. But this is a new thing that I've been tracking on the report, and I think it's very cool to just these two metrics, capacity and number of channels, gives you a good idea of how the network is progressing. Okay. So in case you missed it, these are all of my pieces of content from the last week. I told my guys on Telegram before we started that I had my mother come visit last week, and so I didn't put out a lot of content like on the podcast, and I didn't live stream on Friday, but I'm getting back into it here on Monday. Did have a FedWatch, did have a Market Pro last week, but this is where the section you can get all that. Okay, headlines. Bitcoin headlines. Samson Mow and Jan 3, that's his company that's promoting sovereign nation state adoption of Bitcoin. He had a speech in Mexico, and in this speech he outlined the three ways, or the three main paths that countries will take in adopting Bitcoin. One was add Bitcoin to their nation's treasury. 2 is Bitcoin bonds and mining. And 3 is to enact laws allowing for Bitcoin to be used as currency. And I think this is an important speech because it does outline just very simple. These are 3 avenues every country should be discussing. If you're discussing a CBDC pilot, you must be also discussing these 3 things for Bitcoin. Minimum. I mean, you shouldn't even be discussing a CBDC, but if you are, whichever body is discussing the CBDC also needs to be discussing these things for Bitcoin. And I think it's great that this is out there. It's super crystal clear. Nobody can mess this up, right? So anyway, I thought it was great. Some more Bitcoin news, of course, Gary Gensler. I went into depth on this last week. I just see this as this crypto bro crowd, and I don't want to be too derogatory here, but this is a crowd that bought into meme coins, NFTs, all that stuff, total shit coins. They bought into that. They didn't understand it. They refused to learn. They refused to listen to Bitcoiners' arguments against it. And now they're just lashing out or latching on to any argument out there that's going to save their bags, right? And this is this video about Gary Gensler saying that Ethereum, Bitcoin, and Ripple and stuff were commodities, and most altcoins are actual commodities. This was a video from 2018. Means something about now. But guys, I'm speaking to the crypto bros, not really to watchers and listeners of this show, because you guys are more astute than that. But this is not going to stand up in court. I mean, what are they thinking? This is like a piece of evidence in support of Ripple when they go in front of a judge, against the SEC? No, absolutely not. This has nothing to do with it. He's speaking here. I say that he was speaking in this MIT lecture series or class, I think, that he was speaking as an observer of the market, a professor, a consultant, an expert kind of in the space, not necessarily of the technology, but of the concepts involved. But once he becomes a SEC, now he's the expert of the enforcers, right? So he has a completely different vantage point. And quite simply, he was just wrong here, plain and simple. All of these things are illegal, unregistered securities. And it's not that I like that. Bitcoiners aren't celebrating this. We enjoy that we were right, because you want your theories to work out properly. The reason for decentralization is because these people will come after you. And I remember years ago, people used to say, oh, we'll just decentralize later. Our launch we need to be centralized for our launch, but then we'll decentralize later, as if it's something like nice to have or something. And I remember those specific words. I said them years ago, that decentralization is not just a nice to have. It is the main thing here. It is not a good in itself, but it's a means to an end of being able to stay away from central third parties, trusted third parties that can corrupt the network, and censor the transactions and things. So it's not a nice thing to have. It's a requirement. And I don't know how I got onto this, but these people think that I don't know. I've totally lost my train of thought. I don't know where I was taking that. But anyway, let's move on. Coinbase, in similar fashion to the crypto bros, these crypto bros might be financed by people like Coinbase and Circle and all of these institutions that are heavy into, altcoins. They require altcoins for their business model because their business model is selling scams, selling Ponzi schemes and pyramid schemes. That's their business model. And so they have to have the altcoins. They can't make the same living in the same business off of Bitcoin because it's not a Ponzi or a pyramid scheme. Okay. Coinbase starts a public manipulation campaign this week. They had this video that came out, and pretty much they're just gaslighting everybody. It's just pure and simple manipulation here. First things first, this is hilarious and exactly in line with shitcoiners' modus operandi. According to them, fraudulent shitcoins are legit progress and innovation. And the SEC is to blame because they don't believe that. They don't believe in the progress and the innovation. They are pushing a layer 2 gaslighting operation in the attempt to manipulate the public opinion. So they first tricked the crypto bros into believing that Ponzi schemes and pyramid schemes are legit innovation and progress. And now they're trying to do the same to regulators and the general public. They're trying to make you believe that this is legit. What they did was legit. It wasn't. And pretty much since Coinbase launched, I've said it was an enemy of Bitcoin. At least, I guess, maybe not when they added Ethereum and Litecoin, but when they started adding all of these coins, when they got past maybe their first 3 offerings, I was like, they're an enemy of Bitcoin. And they're one of the root causes for all the leverage and I think part of the slow adoption that we've seen on Bitcoin. Okay, Corey Klippsten also fired back here this week at Coinbase, calling them out for their hypocrisy. Do I have this up? Yeah, let me share this thread. And so Corey Klippsten, he said, with Brian Armstrong and this Paul Grewal, I don't know who that is. I think he's the legal guy at Coinbase, spreading the falsehood that the SEC supposedly okayed every aspect of their possible securities offerings. Let's look at what the SEC actually sent to Coinbase regarding their registration statement. Okay. In this statement, and I went back and read it, it was like point 15 and 16 in the response the SEC gave to Coinbase. They pushed back and they said, we note in your disclosure that the test for determining whether any given crypto is a security is a highly complex, fact-driven analysis that evolves over time, and the outcome is difficult to predict. However, the SEC wants to please emphasize that this test is a legal test and is different than your scoring model, which is not a legal standard and only a risk-based assessment that does not preclude legal or regulatory action based on the presence of a security. Plain and simple. Firing back against this. Coinbase did this risk-based analysis, but we can't launch that. That's too centralized. It's too much like a security, but we will allow people to buy all these other unregistered securities because they passed our arbitrary test, risk-based test. And the SEC said, no, this isn't. Yeah, this is a risk-based test, but it's not is it a security or not test? Okay, that's their job as the regulator. Okay, let's continue. We note in your disclosure that public statements by senior officials at the SEC indicate the SEC does not intend to take a position that Bitcoin or Ether are securities in their current form, and in their current form is in the document. Okay? Please revise this risk factor to clarify that Bitcoin and Ether are the only digital assets as to which senior officials at the SEC have publicly expressed such a view, and further clarify that as to all other digital assets, there's currently no certainty under the applicable legal test that such assets are not securities, notwithstanding the predictions of your scoring model. And then Corey Clipson added that that above section does not contemplate Ethereum as an interest-bearing proof-of-stake coin that centralizes even further over time by design. Great point. So yeah, of course, Coinbase, the SEC put them on notice early on, and they're trying to do this public gaslighting campaign to say that all this stuff is innovation and progress. The SEC is trying to block innovation and progress. That's total garbage. These things are not innovative. Well, they are innovative. They're innovative new types of scams. They put together all sorts of different types of scams, Ponzi schemes, pyramid schemes, affinity, scams, all those things into one. It's a new type of innovative scam. It really is. That's the innovation here. All the things that altcoins promise to do, they could be done better in a centralized way. Okay, so that was Corey Clipson's response. Now I get into macro, and there's so much to cover here in the macro section. I tried to whittle it down to the biggest few things that I could, but Stanley Druckenmiller, he takes aim at the dollar, and of course, Stanley Druckenmiller is a big Bitcoiner, and I linked to some of his stuff that he's said years in the past about being a big Bitcoiner. And he's an investment legend, but I disagree with him on parts of his call. And the tweet didn't show up here for some reason. But Stanley Druckenmiller is betting against the US dollar as his only high conviction trade in what he believes is the most uncertain environment for markets and the global economy in his 45-year career. So he's an investment legend, and I don't want to disagree with him because it feels extremely hubristic. It's conceited of me to say I know better than Stanley Druckenmiller, but okay, I want to tease these things out. So I don't really know what he's taking aim at here or what he's betting against. So it says he's betting against the US dollar. So there's two parts to this. So is he betting against the dollar-based system? That would be a credit-based system. Or is he betting against the dollar's purchasing power? These are two different things. They are polar opposites of each other. If you're betting against the credit-based system, so if you're shorting the credit-based system, that's a deflationary call. Because as credit markets fracture, dollars become scarce relative to debts. That will boost the value of the dollar relative to other currencies. Shorting the dollar's purchasing power is the exact opposite. It's an inflationary call. For the credit dollar to expand, you need expanding economic activity. And that is very unlikely to happen. So thinking of how smart Stanley Druckenmiller is, he must be shorting the dollar-based system because he wouldn't be shorting the dollar's purchasing power, because for the dollar to expand, you must have expanding economic activity. And I wouldn't say that he thinks we're in a highly expansionary time. So he must be talking about the credit-based system, which is a deflationary call. And the way you short that is you short the banks, basically. That's what I would think. So anyway, okay, let's continue. Oil closes the OPEC plus production cut gap. And I've talked about this multiple times last week. Just put in this chart here. Let me make it big. So you can see this bottom thing. I ended up labeling that the start of this was when the White House promised to start refilling their Strategic Petroleum Reserve when price dipped into this range. And you can see it stayed out of it pretty much, went through it. The U.S. lie became clear, and then OPEC Plus had their production cut of 1.6 million barrels per day. Price gapped up, and now it has closed that gap, kind of hanging out there around $75 per barrel. But I think that's an important thing here. I say, to put quite simply, there is so little global demand. Even with the OPEC cuts, the oil price keeps falling. I'll add that the cuts affect on rising prices. Okay, so the cuts cause the prices to go up, and that hurts any recovery of demand. So by cutting the production, they're trying to hold that price relatively stable or even increase the price slightly. But what that does is it just hurts demand even more. It's like a self-reinforcing loop. The global economy needs cheaper energy to stimulate recovery. But by trying to hold prices higher, they are reinforcing the sour economic times that are causing the drop in demand. So OPEC Plus is in kind of a bind here. All right, next part is piracy picks up pace. I shared this with Telegram. I watch this YouTube channel, not all the time, but this one jumped out at me. So Iran, a few days ago, like last week sometime, they seized a oil tanker, and the oil tanker was like owned by an American company. I think it's Chevron or something, but the ship was owned by, or so the oil was owned by the American company. The ship was owned by like a Malaysian company, and it was licensed in the Marshall Islands. But the Iranians seized it. In a tit for tat now, the U.S. apparently has seized an oil tanker. And so this piracy on the high seas continues to escalate. And I say, about a year ago, maybe more, I predicted that piracy would become an ever-growing problem in the coming decade. This is mainly because peaceful global trade is enforced by the U.S.-led rules-based order. Peter Zion states it something like this: "Be allies with the U.S. and we will protect your trade and shipping." Now, as the U.S. has lost the reason to enforce the rules, the Cold War is over and it is a net energy exporter, the natural order of things will come back: wars on land and piracy at sea. So a lot of people think that, oh, we just need to get rid of the evil American capitalists that, have brought all of this prosperity to the world. Now, I know there's problems with the United States, and I know there's problems with our form of government and our rules enforcement and all that stuff. I know there's problems, but there is objectively fewer problems than any other time in history. It's not like the U.S. is going to go away and automatically people are going to be peaceful and prosperous without the U.S. No, the normal state of affairs in this world is wars and piracy and, banditry on land or whatever, but wars on land and piracy at sea. That is the steady state, default state of the world. It has just been in the last 200 years, basically, with the British and then the U.S. keeping relative peace on the high seas, that we've had such huge gains in global trade. So I expect this piracy to pick up, and this is exactly what we're seeing. Okay. Next macro topic is First Republic Bank fails and bought by JP Morgan. This is just kind of breaking this morning. You guys probably have seen all of the reporting, but I linked to a story by Zero Hedge, and I said the interesting part of this interview. The interesting part of this is the interview comments by Jamie Dimon, because we all knew that the First Republic was in trouble. They were unable to sell off their toxic assets. So we knew that they were going to probably go under. And I had expected something like this to happen. I thought they would be just swooped up by the regulators themselves, like they did with Signature or something like that, or something closer to that. But JP Morgan apparently bought all their toxic stuff. They are getting a $50 billion loan from the FDIC with $10 billion in collateral. So that's a 5-year loan. It kind of is a midway step between the FDIC directly doing it and having JP Morgan do it, which is kind of an extension of the federal government, but not technically. So anyway, I thought the interesting part was this interview, his comments from Jamie Dimon. He's the CEO of JP Morgan. And he said, the system is very, very sound. Okay. Of course, by saying very, very sound, he's trying to build confidence probably where there shouldn't be any. But then he goes on, we need large, successful banks in the largest economy. And that's true. That's a true statement. I don't know who would argue with that. Okay, this is nothing like 2008 or 2009. That's where it got interesting for me. So he's saying, he is the CEO. I think they're the largest bank in the world, but I could be wrong about that. Probably one of the most powerful people in the world. He is part of this inner cabal of bankers, so they know what's going on. And he's saying that the system is sound and it's nothing like 2008, 2009. Now, what's this last quote here? It is, this is getting near the end of it. So he thinks that this First Republic is getting towards the end of this. Now, I say most people will poo-poo these comments as extremely biased and self-serving because we don't want to trust the evil banksters. And I don't trust the evil banksters. However, in this case, he might be correct. Okay, Jamie Dimon doesn't want to crash the economy. Bankers don't want to crash the economy. They want to control the economy, right? So I think his interests here are aligned with the general public in avoiding a systemic collapse. I really do. So this is either like kind of manipulation as the Fed does it. They kind of talk or jawbone. Maybe he's talking or jawboning this, trying to say this is nothing like 2008, 2009. We're getting near the end of it. But, however, it does fit relatively well with my thesis and my analysis. So I can't poo-poo on it completely, right? I, for one, tend to believe him, but with a huge grain of salt. All right, so that is the macro section. Very, very interesting stuff going on in the world. Now let's get into price. So guys, on Telegram, you can't see the live stream here, but I did, I posted the link. You can go and check out those charts and whatever that I'm talking about here. So last week, I just showed that we were right at the 50-day moving average last week. And if it bounced, I said it was going to be a very strong sign for Bitcoin and that the stock market should follow. Okay. Now I do the current chart and you see it bounced off of the 50-day moving average. Let me make this big. It bounced off the 50-day moving average in green. The pink line here I added is the 50-day exponential moving average. I just wanted to show that they are matching quite closely. But even if we break the 50-day right now, the 50-day simple, that the exponential moving average is down below, and that could cause similar support because people look at both of these simple moving averages and exponential moving averages, not equally. I think people look at the simple moving average way more. It's built into more indicators and things like that. But the exponential, people trade off that directly. So that's an important level. But we bounced and we got rejected up here at 30,000. So it was not a new high. Very weak. That is very weak behavior in my mind. And now we are dipping down again. Let me check the live chart here real quick. Nothing really significantly different since I took that screenshot. So this is looking weak. If we hold the 50-day moving average again, it is once again a very strong sign for price. But I think there's less of a chance of holding the 50-day even now than there was last week. So I do expect it to at least breach the 50-day moving average, but possibly bounce. So let's see, what do I say? Okay, well, hold on a second. Let me go over the stock market chart. So this is the S&P 500. It did have a new swing high. The only high for the entire year. There's one day that's a higher close for the entire year, and that's like, I think this is February 2nd or 3rd. So that's very interesting. But the NASDAQ did set a new yearly high close, and it looks very strong. I think if they're both pulling back today, let me look real quick at the live shot. Yeah, it's still up higher, but it's the S&P is not going to close at a new yearly high, is it? Oh my God, it might. So we'll see how this closes today, but this is looking very good for a new yearly high close for the S&P and the NASDAQ. And that's what I said last week. If Bitcoin bounced off the 50-day moving average, we'd probably see stocks follow, which they have. So now back to the newsletter. What I said to this week is that these things make me more confident that this dip today in Bitcoin is not a shift in trend. Bitcoin is still bullish, just testing and retesting support. Now, retesting support is dangerous, because it becomes easier to break support or resistance the more times that you test those levels. But anyway, there is an increased chance the 50-day does not hold this time, but at the same time, there is less of a chance that will lead to an uncontrollable downside. So, of course, this is just a very quick snapshot of price. If you want more on the Bitcoin price, more on the technicals and the fundamentals of Bitcoin, check out the Market Pro. If you go to bitcoinandmarkets.com/pro50, you get 50% off your first month. Okay, let's go into the mining headlines. Bhutan has been secretly mining Bitcoin for years. I just pulled out a few quotes from each of these articles. Druk Holding and Investments, DHI, Bhutan's sole government-owned holding company, has confirmed that they have been mining Bitcoin for multiple years as a component of its diversified investment portfolio. The company stated that it began devoting resources to Bitcoin mining when the price was around $5,000. Now, there's a wrinkle to this story because I think Bhutan this is Bhutan, during the FTX and the Celsius crash, they lost a lot of money. BlockFi, those, they had money in there. So they profited off of Bitcoin, but they also probably got caught up in all this DeFi stuff. So I don't know where they have come out, if they're even or what, but they have been mining for a couple years, it looks like, at least maybe since 2020 or prior. So that's very interesting. Bitcoin miner Bitfarms hits new hash rate high amid Argentine expansion. The all-time high was attributed to the expansion of production at its farm in Argentina, which was first fired up last year. The most recent increase came as 2,100 new miners were energized earlier this week, while some existing miners who had been underclocked were brought to full capacity. So that's interesting, this underclocked. So that is, again, a disclaimer, I'm not a miner. This is one area of Bitcoin that I really would like to become more of an expert in. But I do know that underclocked is, you are running your machines below full capacity. So you're kind of like turning that dial down a little bit. You're not squeezing out every single hash out of your machines. And that could be maybe you're wanting to save a little money on your power bill, like the price of Bitcoin goes down, and instead of turning off a certain number of miners, you actually just turn down a certain number of miners. But that's interesting that they put this in this article. So, Okay, next article, Jack Dorsey. He takes a major step in Bitcoin mining chip development. Block, a company owned by former Twitter CEO Jack Dorsey and founder, he was CEO and co-founder of Twitter, was completely or has completed the prototype design of a 5 nanometer high performance Bitcoin mining ASIC. The company announced this in an update post on April 28th. The US firm noted that developing Bitcoin mining ASICs is a technically and financially challenging task. This led to a high level of centralization of the supply of Bitcoin mining ASICs, which it deems detrimental to miners and the Bitcoin network. We talked about this. Did we talk about this last week? That people are saying that, oh, it would just be super easy to 51% attack Bitcoin. It would just take $10 billion in mining equipment and yada, yada, yada. Like, it'd be super easy for any government to do it. But look, it's super challenging to make these ASICs. So any government agency would have to be competing with the free market to buy these ASICs. And everyone would know that there's a big player buying more than half of all ASICs out there. And they would have to continue that. So a 51% attack, you have to 51% attack ASIC manufacturing. You have to 51% attack the energy use. You have to 51% attack the network. It's not just all buying the machines, hooking them up, and boom, you 51% attack. No, it's a constant ongoing process, expensive process that gets more and more expensive because the reward would go down in value while your effort would have to go up to keep ahead of people. So it's a continually it continually gets more expensive to a 51% attack, and you can't really do anything. All you could do is do empty blocks. That's it. It makes no sense to do a 51% attack. And the fees would go up. So the price for the honest miner would stay the same or go up, or the reward, because the actual block reward would probably go down in value, but the fees would go up in value. And so, or the fees would go up. So the reward for the honest miners would stay the same or go up, where the reward for the dishonest 51% attacking miner that's doing empty blocks, that would go down. I don't know. It's a very interesting topic. It's not nearly as easy as what people that FUD Bitcoin, what they would like you to believe. All right, let's continue. Intel. Okay, and they also bought the Intel chip, Block did. So Intel had earlier in March said it had suspended production of ASIC chips for Bitcoin mining. The tech giant had launched its Block Scale line in April of 2022, catering to increased demand for Bitcoin mining. However, it appears to be taking a new direction and will stop taking orders for block scale chips by October 20th, 2023, and end production by April 2024. Block intends to take advantage of this to fast track its development of proprietary mining kits using 3 nanometer chips. I have not heard of 3 nanometer chips, but apparently they're a thing. Considered the most advanced chip technology to date. So yeah, they have bought out this effort by Intel, their Bitcoin mining fab, their chip fab there, and they're going to be using it. Very interesting. Okay. Difficulty and hash rate. Once again this week, Bitcoin mining is very stable. It is currently on track for a small decline. I should have said difficulty is on track for a very small decline of 2% in 3 days. The first decline in 6 adjustments. The stable nature of hash rate can be interpreted as saying there is no systemic supply and demand imbalances in the market. I just added that for a little context. But you can see this chart here from SEPA. Hash rate's back on the rise again, but very, very stable. Okay, mempool. So after it cleared out completely on what day was this? Looks like the 23rd or so of April. It has once again started increasing. And as I said up front there, fees are over $1, which is pretty high. But this is the reason, I think. Okay, so this is corresponding to the inscriptions, and inscriptions have skyrocketed over the last week. So what do I say? I say in the report, this spike in the mempool does correspond to a massive increase in ordinal inscriptions over the last week. As you can see below, almost 100% of these inscriptions are text. So they will tend to be smaller in size, I think. I'm not an expert in ordinals yet, but text inscriptions are probably smaller in size than, say, video exclamation point. Let me pull this up again. So you see this bottom chart is broken out by type, and text is almost 100% of all of the inscriptions of the last week. Few images maybe on there, but mostly text. Okay. Lightning Network news. We're getting close to the end here, guys. The main news that I saw this week for Lightning Network was Lightning Labs. They have come out with some upgrades to their implementation. And this was from the article that I pulled out. Lightning Labs manages a tool called Lightning Terminal to make managing Lightning nodes easier. Behind the scenes, LitD aims to abstract certain features of node management so users don't have to manage them directly, making it easier to use Lightning. And so what has Lightning Labs added? They've added auto updating fees based on usage per week. So I guess you would have to go in there manually and update your fees depending on your liquidity of your channels and things like that. And now apparently this has some auto updating features to make that a little bit less hands-on. Number two thing that they added was accounts. And these accounts, they allow multiple users to use the same node. So if you have a friend or family member that can do this and manage this stuff for you, now you can set up and use their node with separate accounts. I think that's a very cool feature. Very, very cool feature. All right. And that's it for this week's report. Thank you guys so much for joining me. My name is Ansel Lindner. This is Bitcoin and Markets. Check out bitcoinandmarkets.com to sign up for this free report every Monday. It will come out. You also get notified of all my content that I release. And if you want to support the show, you can do so there by becoming a basic member or a premium member. And the premium member will get the Premium Market Pro. That is all of my technical fundamental analysis, more in depth on the charts and where we're going, both in macro and in Bitcoin. So thank you guys so much for joining me, and have a good rest of your day.